Right. So in cash flow statement, first we need to understand what is meant by cash flow statement. So in cash flow statement, we record all the cash and cash equivalent receipt and payments. So actually this is one of the part of the financial statement. So in financial statements, we have statement of comprehensive income, statement of financial position, changes in equity, cash flow statement, and the notes. So this is a part of the financial statement. So this has not only the cash, we show the cash equivalent as well. Cash equivalent means the short-term, highly liquid investment. Short-term, very short-term, less than, mostly less than 3 months. Right? So mainly the cash flow statement will be prepared to show 3 types of activities. Investing activities, mainly related to non-current assets. In financing activities related to equity and non-current liabilities. Operating activities related to the short term, stock, debtors, creditors, payables, expenses. So those are current liabilities and current assets. So this is not a ledger account. This is the balance sheet which I have given here. It is not a ledger account. It is a way of presenting the statement of financial position in horizontal format. We have vertical format and horizontal format. Normally we don't use this, but this is also there as a presentation. Right? So non-current asset, current asset. This side we have equity, non-current liability, current liability. So these are the 3 activities. So if you take share issue, it's a financing activity. Dividend payment, you pay dividend for your capital, shares. So it's a financing activity. If you take dividend receipt, what is the activity? Dividend receipt, what is the activity? We receive dividend for investment. If we have invested in shares in other companies, we receive dividend. So it is investing activity. Dividend received is investing activity. Right? So any transaction related to current asset, current liabilities, those are operating activities. Sales related, debtors related. Right? Those are operating activities. Okay. Then the third part, the cash flow statement. The preparation methods. Preparation methods. Right. So there are 2 methods we can prepare the cash flow statements. Statement direct method and indirect. Direct method and indirect method. So this is the theory part related to cash flow statement. Direct method and indirect method. Most of the questions are based on the indirect method. Okay, so this is the summary. Right now, I will do a simple question. For you to understand direct and indirect. So direct method actually in the direct method, cash flow for operating activities, mainly the difference between direct and indirect is only in the operating activities. So in the direct method, operating activities, the cash flow is directly given. Directly you have to identify. For an example, now I'll show you the direct method. We have operating activities. You can write this, okay? Operating activities. In the operating activities, the main cash transactions are cash sales. So you will record the cash sales, let's say 100,000. Then receive from debtors. Let's say this is 500,000, this is 600,000. These are the two main cash receipts of a business, operating activities, from the sales. Then the cash payment are cash purchases, payment to creditors, and expenses, operating expenses. These are deductions. Let's say this is 200. Right. So you calculate the total. So this is called cash generated from operations. This is called cash generated from operations and operating activities. Then in operating activities, we deduct the interest paid tax payment. These two you have to separately show. So this is 50. And the final answer is called net cash flow from operating activities. And so this is how we show the cash flow from operating activities in the direct method. Very important. So when you write this direct method, operating activities is the heading. Directly give. So when you do the direct method, there are important ledger accounts that you need to prepare. Right? Mainly to identify the receipt from debtors, payment to creditors, cash sales, credit sales, expenses paid. And mainly we have to prepare the trade receivable account, trade payables account, and the expenses account. I'll explain from the example. The second one is indirect method. Indirect method. Operating activities. In the operating activities in indirect method, what we do is we convert the profit. We take the final net profit, which is calculated from the income statement, statement of comprehensive income. So we take profit before tax. We take the profit before tax. We say the profit before tax is 7. So for this, we will make adjustments. This we will make adjustments. Right? And heading adjustments. This profit has some non-cash items that we need to remove, that we need to adjust from the profit. What are the non-cash items? Tell me, what are the non-cash items? Non-cash items are, one is dividend, sorry, depreciation. Depreciation. Then we have disposal, profit or loss. It's not a cash receipt or payment. And also there will be other activities, transactions of other activities. Now, under the operating activities, we need to find out the net cash from operating activities. So other activities are like interest expense that we have to show separately, interest paid, right? Then you may have dividend income. Dividend income, normally it will be added to the other income that has to be removed. Right? So mainly those adjustments we have to make in this other activities and non-cash items. So if there is depreciation, that will be added. Disposal, if it is a profit, we have to deduct. Interest expense will be added back. Interest expense will be added back. Dividend income. Yeah. So you take this entire total. Balance. So this is called operating profit before changes in working capital. Operating profit before changes in working capital. So after this, we have to adjust for the working capital. So what is meant by working capital? Working capital means current assets and current liabilities. Those are working capital. Right. So after adjusting for the non-cash items and other activities, you need to adjust for the working capital. So mainly there will be debtors, creditors, and expenses. And remember, relationship with cash. The relationship with cash. Assets, there is a negative relationship. Liabilities, there is a positive relationship. Remember this relationship, important, because based on that only we will record here. So what is the meaning of negative relationship and positive relationship? If you take debtors, when the debtor decrease, what happened to cash? Remember the accounting equation. When debtors are decreasing, that means debtors are giving us money. Cash will increase. So debtors having a negative relationship. Let's say stock. When the stock increase, what happened to the cash? Cash will decrease. Stock increase because you paid money. You gave cash, so cash minus stock plus. Then that is why we say assets, there is a negative relationship. When the asset increase, cash decrease. Asset decrease means cash increase. Then when it comes to liabilities, say creditors decrease. Why creditors decrease? Because you paid cash. Cash also decrease. So there is a positive relationship. So that's very important to understand the relationship. Then it's easy for us to do the calculations in the cash flow statement. There is a question to repeat that again. Okay, so it's actually based on the accounting equation. Asset equals plus liability. So if the asset in, let's say, stock increase, then what happened to the cash? Cash will decrease. So negative relationship. Right? If the debtors decrease, then what happened to the cash? If the debtor decrease means cash increase. So see, asset is having a negative relationship with the cash. But if you take liabilities, creditor decrease means what happened to the cash? Cash also decrease because you pay for the creditor. So liabilities having a positive relationship. Minus means minus, plus means plus. Liabilities are having positive relationship. Assets are having negative relationship. Right? So here when you take, when debtors are decreasing, debtors decrease, opening and closing balance. If the debtors decrease, that means plus. That is a plus. Right? Start with stock. Stock decrease. Then the debtors increase. Increase means minus. Then we have creditors. Right? Then we take here. This will take creditors decrease. So if you take creditors decrease, then this balance for the answer is 500. This is called cash generated from operations. This part will be same. So finally, you should get the same answer as the direct method. Direct method and indirect method. Can you write this? The format of direct method and indirect. Now I will explain this from example. Other activities are same like same. Other activities are not changing. Any payments would be minus, receipt would be plus. So main difference comes with direct and operating activities. So there was a question: why income and profit minus? So both indirect and direct. Yeah, your final answer. This answer should be same. Net cash flow should be same. So here there is a question: why disposal profit income is deducted? Because when you are calculating the profit, income was added. Now to remove that, you have to deduct. Is to minus. But when you take depreciation and interest expense, these were deducted when calculating profit. So we are adding back, add back the expenses. That. Right. Now let's do a question. So, here, so here entries in both methods are different. Answer should be same. We will do a question. We will do some questions, then you will understand. Right, I will explain. They will say which method to use. Mostly indirect method. In the question, they will mention which method to use. Okay, so don't worry about that. Based on the method that they say, we can do it. Now I'm going to do a question. Example. So let's do this question. So we have the statement of profit or loss. Revenue, raw material consumed, staff cost, depreciation, loss on disposal of non-current assets, interest payable, profit before tax, taxation, profit for the year. And so this is our income statement. Right? Income statement. Then we have the statement of financial position for 2 years. Statement of financial position is given for 2 years. Right? Year 2002 and 2001. There we have PPE, assets, property, plant and equipment. Right? And current asset. Then the current asset. Then we have equity and liabilities. Under that, capital and reserves. Then non-current liabilities. And current liabilities. Right, so these are the values, and finally they are given during the year. The company paid 90,000 for new piece of machinery. Dividend paid during 2002 total to 66,000, and interest paid was 28,000. So this is how you get the question. Right? Required, prepare the cash flow statement. Direct methods. Both the methods we will prepare the cash flow statement. example 1. So let's do the indirect method first. Indirect method. That's the most common and easiest method. So I want you to draw a format. So here is the format. CLB company, statement of cash flow. We are doing indirect method. Cash flow from operating activities, starting with profit before tax, and heading adjustments. Then we get the answer operating profit before changes in working capital. Then keep 3 lines. Two years information, there is a doubt. So why they have given information of 2 years in statement of financial position. That is to show the increase or decrease of working capital, changes in working capital. We need to see the difference between opening and closing, whether it's increased or decreased. That is why they have given 2 years information. Then cash generated from operations, out of that interest paid and tax paid should be deducted. Then we will get the answer, net cash flow from operating activities. So net cash flow from operating activities, net cash flow from investing activities, and financing activities. These 3 only we need to find. Draw this. If you're done, let me know so I can start. Format. Go to format. Okay. Then after that, uh, normally in indirect method, there are some workings that you need to know, you need to do, especially for the PPE, property, plant and equipment, and taxation, and for interest. So I will draw workings or ledger accounts for these three, and they're telling that during the year the company paid 90,000 for new piece of machinery. So there is a machinery which was purchased during the year. And also, if you go through the income statement or profit and loss, there is a loss on disposal of non-current asset. Loss on disposal means there is a disposal of non-current asset. So we need uh, to sort out the PPE. We need to do. We need to prepare the ledger account for PPE depreciation and disposal. Three ledger accounts. Right. Working one, PPE cost and PPE provision for depreciation and the disposal. Three ledger accounts. We also draw working for taxation and interest expense. So let's do the workings first. Can you all start with PPE working number one, which is related to property, plant and equipment. What you have to do is opening balance, closing balance, and the transactions, which is known transaction, you record it and find out the unknown value. So when it comes to PPE, cost, opening balance 2021, balance brought forward is 1560. And the closing balance 1596. Provision, opening provision is 224. Closing provision is 380. Right? And there is a new purchase of PPE, which is given as an additional information. During the year, the company paid 90,000 for new piece of machinery. That is cash. New purchase. And the difference will be disposal. Identify how much is the disposal. Identify how much is the disposal, the cost of the disposed machine. Then when it comes to provision account, current year depreciation will be credited and disposal will be debited. So find out the depreciation of the disposed asset. In the disposal account, you transfer the cost. Number one. First, you transfer the cost. Number two, transfer the depreciation. Number three, you need the cash amount. Number four, they have given the loss. Loss is given. So loss comes to the credit side. The difference will be cash. Cash is not given. So we need to identify what is the value of cash. Okay. Can you all tell me the answer? Tell me the cash received from disposal. Some. I'll give 2-3 minutes for you all to try. what is the cash received from disposal? Did anyone find the answer? But I'll make it more easier. During the year, company paid 90,000 for new piece of machine. So 90 cash, new purchase. Then difference is disposal. Depreciation was given in the income statement. Depreciation is 180. So once you write 118 here, you will get the disposal. Right? And the loss is given in the income statement as 80. Income statement debit, disposal account credit. Right. So what is the cash received from the disposal? Disposal, I got one answer, 54. Let's check the answer. PPE 1650. So 1650 minus 1596 is 54. Provision for depreciation 342 minus 380. 24. So cost is 54, depreciation is 24. So cash balance 54 minus 24 minus 80. So it's 12,000. 12,000 is there. Disposal, cash received from disposal. Anyone complete this? Right. Now there are transactions normally in the PP adjustment there are four transactions that will come for the cash flow. There will be four transactions which will come for the cash flow. First, can we write the profit before tax? Profit before tax is here. Profit before tax 392. Let's write that 392. Profit before tax is 392. Then the transactions of the PPE. So there will be two adjustments. One is depreciation, the one is disposal loss. Two adjustments. Depreciation 180 will be added. Disposal loss also will be added 80. Right? Two adjustments. Then there will be two more transactions for investing activities. Two transactions for investing activities. So most of the transactions you will get these four adjustments. One is purchase of new PPE, proceeds from disposal. These are the four transactions related to the PPE. We did the working in order to find out these four amounts. From the working only we find most of these values. So depreciation, disposal loss already given. Right? Then investing activities, purchase of machinery. How much is the purchase of machinery? It is 90, cash minus. Then proceeds from disposal, which is 12,000. Proceeds from disposal 12. So this is the first part, PPE adjustment. Prepare the PPE account, provision account, and disposal. And find out these four values. Sometimes they will give you depreciation, disposal loss. Sometimes you have to find those values. Is it clear? How I got the proceeds from disposal? That is, now you have the cost, depreciation is given, loss is given. So difference in this account 54 minus 18 and 24. The difference only we get as disposal. Right? Can you all tell me whether you all understood this? Because this is the most difficult part in the cash flow statement. PPE working is the most difficult part in the cash flow statement. So I want to know whether you all understood this PPE working. Other things are very simple. So tell me everyone whether you understood. I want everyone to give me an answer. Acacia, Shafa, Salma, Kavindu. Yes. This is the most difficult part. PPE work. Right. So let's do the working for taxation and interest expense. Taxation. Take the opening closing balance. Taxation here. Current liabilities. Opening balance is 86. Right. Closing balance is 102. So here we are using the techniques that we studied in incomplete records. Opening balance is 86, closing balance is 102. And tax expense is 124. Is the amount which transferred to profit and loss. Profit and loss. Transferred amount is 124. And the difference will be the cash payment. Difference will be the cash payment. Cash account credit, taxation account debit. So you calculate how much is tax paid. How much is tax paid? Interest expense, there is no opening closing balance. There is no balance. Opening balance is 0. Closing balance is also 0. Profit and loss, how much? Interest payable 28 and cash amount is also dividend paid is 66 and interest paid was 28. Yeah, at the bottom you have interest paid is 28. So there is no payable for interest. The expense was completely paid. Cash, yeah. 108 taxation. The opening closing balances are given in the statement of financial position. Here, taxation 86 opening, 102 closing. If you have any doubts, please tell me. I will clear them because this is a very important question. Because once you know this, you can do any question. This is the basic. Right. Cash 28 in interest expense means that is the cash payment. Interest paid was 28. Interest paid. This is the interest expense. So expense was paid. That is why there is no payable balance. Expense and the payment both are same. Right. Now let's record that. Interest expense we have to add back. Here. Interest expense 28 and interest paid is also 28. That has to be deducted from here. Expense and payment both same. Tax paid we have calculated it was 108. Right. So this is the main part. Everything else is very simple. Then now we have to do the working capital. Working capital take the inventory, trade receivables, and trade payables. What has happened to the inventory? Inventory has increased. Increase in inventories. Inventory, there is a negative relationship. If the inventory increase, cash will decrease. Asset negative relationship. Trade receivables, what happened? It is also increased. Increase in trade receivables. 18. Then the trade payables also increased. That is plus. Right. So other than that, check the statement of financial position. We have taken assets, we have taken everything. Current assets done. Stated capital, there is a increase. There is a question to explain the increase decrease. Right? So see here, inventory increased by 4. Right? So when the inventory increase means that you have purchased. Therefore, we have to deduct. Negative relationship. Plus means minus. Trade receivables also same. Plus means minus. But trade payables, plus is plus. Positive relationship. Is it clear? Nizam? Then the stated capital increased 364 to 396. So that is a financing activity. Issue of shares. Is 396 minus 364. 32. So that's a plus because when you issue shares, you get money. Then the current liabilities, non-current liability. There is a loan 500 to 200. So that's a settlement of loan. Settlement of non-current loan. Which is 300 minus. And there is a dividend payment 66,000. Also, you can grow the retained earnings to see whether there is any other transactions related to retained earnings. Retained earnings opening balance is 514. Net profit from the period 268. Dividend paid is 66. So if you calculate this 716, so there is no more balances. You are getting the exact answer. If there is a difference, then you need to see why there is a difference. Okay, that's it. So we calculate operating profit before the working capital, then the cash generated from operations, net cash flow, and this answer is 8,000 minus. So that's the net decrease in the cash and cash equivalent. Dividend paid is given, Yogesh, here. Yeah, 66,000 dividend paid is given. Even if they are not given, the difference we can take dividend paid. Then you have to write opening balance. Opening balance for cash is 56. So closing balance would be 48. So that's that. retained earnings, we don't take the balance because the difference with the retained earning is net profit and dividend. Net profit we took on the top here, profit before tax, and the dividend payment we deducted here. Right. So this is indirect method. Right. Now I'll explain how to do the direct method. Right. So direct method, investing and financing activity will be same. Okay, this won't change. This will be same. Only the operating activities will be different. Okay. So let's draw the format. Same question. So direct method, these are the workings. For most of the questions, you need to do these workings. Ledger accounts for trade receivables, trade payables, operating expenses, and cost of sales. And draw the format for direct method. Where we have interest rate and tax bill. So most important thing is this working. If you do this working, then that's it. Look at trade receivables, trade payables, inventory. investing activity and financing activity is same like before. Uh, can you all do this? Trade receivables, opening balance, trade receivables, opening balance 58, closing balance 76. Then we need cash and sales. Find out the cash received from trade receivables. Received debtors. Then find the trade payables. Amount paid to the creditors. Paid to then operating expenses. There is more payables, more receivables, profit and loss. Operating expense, there is only staff cost. So purchases not given, so you need to make the cost of sales calculation. Through that only you have to calculate the purchases. Cost of sales means raw material consumed. Opening stock is 20. Closing stock is 20. So find out the purchases. Can you all complete this? Ledger accounts. Right. So sales means the revenue 720. It's the revenue. Raw material consumed is the cost of sales. So cash received from trade receivables is 702. That's the amount received from debtors. Payables, opening 6, closing 12. Now purchases also not given. You have to find out from this. 74. Purchases will be 74. And the difference 80 minus 12, 68. Then we have to calculate expenses paid. Profit and loss, only the staff cost is given. 94. Interest paid and tax paid already similar to the previous one. 2010, 100, 404. Yes. So it's 404, similar to the previous. You get the same answer. Right. Any questions? Now, other things are same. Investing activities and financing activities will be same. The only difference is operating activities. Right. So, any questions? I'll share this answer in the WhatsApp group. Any questions? Okay. So if there is no doubts, we'll conclude from this. And so in the next session, I will do the past papers of the cash flow statement. If possible, just try to do some of the past papers, so it will be easy for us to continue. And if you have any specific questions that you all want to do, please let me know. I can discuss in the next class. Okay. So good night and take care.